Stockradar stocks on the move for another week. Big show this week. Lots of things happening in the markets. Lots of things happening with our stocks. So don't forget to check out our trading centre for an update on all our covered stocks in the ASX 200. There's plenty of things happening there. I also have a special offer open at the moment to all new members with a 3 and 4 months bonus offer for 12 and 24 month memberships. Anyone who joins before 5th of December 22 is eligible for that. So take advantage of that. There's lots of stocks are hitting our scans at the moment. And at the moment, if we look at our top 10, trend intensity ratings at the moment, we've got some good new ones in here. A2 Milk's starting to move off. Chorus, Computer Shares still there, of course. Lifestyle Communities, Mineral Resources, New Farms jumped on board. PME's come in. AMP's been a good performer. IEL and IGO are also in there as well. So plenty for you to have a look at today. In consumer discretionary stocks, I'll be having a look at those in the newsletter, which will be out next week. On those things, are we listening or are we scared? Probably scared, but I think it's probably the right behavioural emotion to have at the moment when things are starting to move. So that's what normally happens. So we'll check out those stocks in the newsletter due out this week. So let's get straight off into the markets now, kicking off with the Dow Jones to start with. It's bumped up through that little point there, a bit like our market at the moment. It's starting to nudge its way through there. There is going to be some heavy work to do here. In fact, it looks very similar to the ASX 200 at the moment, although we do have a double bottom on the ASX 200, which we'll have a look at in a second. But the Dow Jones is performing pretty well. We've got some good volume here. Momentum's really come back to neutral. It's above the average, and it's looking like it wants to go higher. So that's a positive sign. But beware, we are nearing the top range there. So again, stock selection is still important. The Nasdaq, well, it's not really doing that much. It's struggling under the weight of those big heavy weights. It's trying to find a base above 10,000 at the moment. There's a bit of volume there two-way. The momentum's still pretty negative, not a lot of positives there. Still below the average. So those tech stocks don't look like they're going to be jumping off the box again straight away. Over to the commodity section. Copper really went up and went back down again. Okay, a bit of a fright there, but I think it's more buyers withdrawing more than anything because we've got some very big volume on the up days and not so much volume last week when it came down. But we'll keep an eye on it because it's obviously not going to go jumping higher right just yet. But it is positive. It is starting to show buying signs of a bottom there. Again, as it gets higher there, it gets into this big range. All those, copper, the indices all have that big area where it just topped about for a long time. That's overhead, which creates a bit of a dark cloud above those things, which will be hard work to get through. So that's Dr. Copper at the moment. Gold, again, it's broken out. Not a lot of volume. There's been a bit of volume down here on the low, on the jumps here. Hasn't really gone on just yet. It's probably not going to take off. It's probably going to go sideways for a bit. Momentum is still pretty weak on gold, so we're not letting it come. We do have a few gold stocks moving, and I'll look at one a bit later on that's looking okay. Crude, again, is still ranging in that range between S1 around $80 and R1 up around 100. So that's the range there. We've got some two-way volume here. We saw some good buying on the rally. We see some good selling on the weakness. Momentum is still negative, so jury's still a little bit out on that one there for Brent crude. Okay, now to our market, which does look quite good. If we look at this looks like the Dow. There's a little bump up through this resistance point here. We've got a nice little double bottom here, which targeted this level here. But it's certainly not by any means going to race through here because this is going to be a big resistance area for it to get through before it can march on up towards those highs and through those highs. But the buyers certainly are challenging the market at the moment. And if I just go and have a little look at this chart here, this just shows you here, this is the ASX 200, the highs, this is the rally we've seen of late, and you can just see there's been some pretty good volume here. We saw some heavy volume on the downside here, but this has been some pretty solid volume from there, and even last week when there was a big selling volume, the market didn't come down, so that's probably a good sign. So that just shows you the volume picture there, which is probably constructive at the moment for the ASX 200. Okay, so that's the ASX 200. I've just marked here August 20 portfolio start, March 20 portfolio start. I'm going to look at a couple of portfolios I've started, which you've probably seen over the last couple of years. My original portfolio goes back to 2003, which is all well and good, but we're not here for a 22-year run at the moment. The long term is always important, but some people are starting portfolios more recently, so I still want to show you what we can do and how they have performed during that period. So just going to look at our stock pick count at the moment. It's only up 1 this week to 28 of 183 covered. Of those, there's 162 stocks and 21 ETFs. So there's no ETFs in there at the moment. Just 28 stock picks of 162. So that's quite. It's better than it has been, but still by no means out of the woods yet. So some of the indexes, like the banks, have been pushing this higher, and some recovery stocks like Wesfarmers and stuff, which are looking a little bit better as well. As to the portfolios go, my three that I run at the moment, the Conservative, Energizer 5 and the Energizer 10, you can see how they are. The Conservative is 5 out of 20. It's a bit better, but it's only 25% equities, 75% cash. The 5 stock and the 10 stock are both full at 5 and 10. Okay, so they're 100% equities at the moment, so we picked up some good stocks into those at the moment. And below there you can see the two that I'm going to look at today. I'm going to look at it a bit more later on in trading tactics when I talk about the win-loss ratio. But the 5 stock that I started in August 20, it's got a compound annual growth rate of 14.7, and it's 100% equities. Some of the big winners in there, and you can see there the win-loss ratio, win-loss 39%, 61%, so a lot more losers than winners, but I'm going to talk a little bit about that later on so you can understand that a little bit. Some of the big winners I've had in there over that last period, the last 2 years, has been Luca, Boral was a big winner, James Hardie was a big winner, but lucky we got out of that one because it's been a big loser recently, and Whitehaven Coal more recently. And the Energizer 5 stock I started in March 21, which was another 9 months later. It had mineral resources, Whitehaven and Computershare, which has been a big winner in there for those ones. But it's got a win-loss ratio of 33% to 67%, but it still has a compound annual growth rate positively at 16.8. So we're going to see why that's happened a bit later on in trading tactics. Okay. So I don't think I'm going to talk about that too much at the moment, rather get into the markets, I think, and see what they're doing. Okay, so let's look at some stocks for a start. Okay. Yes, so I'm going to go straight into Wesfarmers now. We did look at that last week, but I just thought, again, it's been a positive mover again this week. It's heading up towards this R1 level, and we have a constructive high-low here, resistance point here. So this is a trend reversal pattern we've got here, and we've also got down the bottom here, we've got a bit of volume appearing there, and this is starting to ease off. We're above the average, so trend intensity is still -4, but if it does get through here, it's probably going to trigger a positive rating for next week if it gets through there. So as I said, the normal process that I look at is analysis, what gets me in, and then I use a function of money management to manage the trade. But I'm looking at trend, volume, moving average, and momentum. And at the moment, I've got volume positive, moving average is positive. I'm just waiting for the trend to reverse and a bit of momentum to kick in. Momentum is usually last in the trend reversals, as we know. So it's looking constructive because Wesfarmers has come down about 38%, and that's a big correction there. So there's probably a pretty good opportunity, I think, as the market starts to recover. Okay, we've got quite a few stocks to get through today. Commonwealth Bank, it's been a really good performer, and we've seen this pattern here. It's been in a trading range for a while, but this last recent pattern, we saw some good volume on this rally. We saw some fairly heavy selling into here, but the buyers have come back into this market and pushed this higher again, and it's been solid buying, and these sellers have not really come back into this market as yet, so that's a good sign. So we're now towards those highs. This will be a very interesting situation to see whether this Commonwealth Bank can get through there. Its trend intensity rating is 0, so it is prime, cocked and ready. And as you can see, we're above the average, volume is okay, and momentum is also positive. So it is really ready to go, CBO, if it gets through. It's not through yet, so we'll just wait to see what happens, okay? CSL is another one which is interesting. It's still in a big trading range, which really hampers anything for me. I really need to see this trading range break before I will do anything. But I can see what's happening down here. We've got some higher lows coming through here. We've got a bit of resistance through here. So this is actually is a trend reversal pattern. But when I've got 1, 2, 3, 4, 5 resistance points just behind me there, and they're close to where I am, I'll wait for this level to break rather than take the trend reversal. If I've only got one, I'll probably take the trend reversal. But this is significant resistance, and so I'm going to wait for this one to go, which is up around 336, I think, something like that. This resistance here at the moment is around 300. Now we've got a bit of volume appearing here. Momentum is positive and it's above the average. So it's going to be really interesting to see what happens with CSL, because after being stuck in this range for 3 years, if it does break out, that's going to be a pretty bullish sign. Trend intensity is -4 at the moment, so watch this space with CSL. So some of those biggies, CBA, CSL, that's why the index is starting to move higher again as these stocks start to move, these big heavyweights. Okay, AMP. Another interesting stock, and I know that we've got some difference of opinion. There's a guy at the Hearts and Souls conference who was very bullish on this. I think he was valuing it over $2. Then I saw an article in InvestSmart today. I think it was Elizabeth Moran saying it was only worth probably a lot less than that. She couldn't quite see that value. So we always get these differing opinions at this point in time, but really price is what we do. Price never lies, and as price is going up, that's what we trade, that's what we look at. So I've been looking at this for a while, and you've seen this chart a few times. And we know that this selling here is now reversed into some buying. We've got a high low here, we've got a break up here which gave us a signal, and the price has started to march higher. And again, I know we've got some volume back here, this tick back here which pushes the volume down a bit. If we just get rid of that, you can see there's a bit of volume here, nothing outstanding, but the price is going higher. So that's a pretty good sign, I think, for AMP. At the moment we've got some good leverage because this is a low price stock, and we quite like those stocks because we get good leverage on the price. So it's looking very good, and momentum is very good as well. So we've got a good signal back here on AMP. It was back in September, a bit of volume and the momentum there. So that's an interesting one. Trend intensity rating is 10 for AMP, and it looks very constructive. Okay, other stocks that are looking at the moment. Sandfire, an interesting one. Only reason I say this because it has jumped out of the blocks in no uncertain terms on some very, very heavy volume. The Oz Minerals thing happened. Now Sandfire's may be becoming a target. I don't know. But this area down here, S1, is a big long-term support area here, and we bottomed here a couple of times just above it. So this is a really good sign here, and we've now got this volume. We're now pushing above the moving average. Above here almost gives us a trend reversal pattern. We'll have to wait and see. You have to keep an eye on Stockradar to watch that. But trend intensity rating is up to -3 now, so that's quite good. This is still well back, but it is easing. So an interesting situation. It's a mining stock, and mining stocks can move quite fast, we know. So if you're interested in this one, there's certainly got some good potential in Sandfire if you want to have a look at that. Okay, the next one we'll look at is Qantas. Well, what a report that came out yesterday. It's the stock everyone loves to hate because you've got to pay these huge airfares, but it's making a lot of money, and that's good, even in an environment of high energy costs. So Qantas is trend intensity rating of 8. It's moving high. It's broken out of a big trading range, which is good. It's strong. And we've got good volume here. We've got good momentum here. It's showing all the right signs that we want to see for a rising stock, and we're starting to get this higher-low situation, higher-high, higher-low situation, probably targeting up around this 750 level. So that's an interesting situation for Qantas, and we've got on board this one at the right time, and we're now seeing it start to move off, which is fantastic. Okay, A2 Milk, another one which has come on board. It's had a big downtrend for a long time, but now it's starting to finally be released from these lows here. Let me just see if I can just blow this up a little bit more for you. Okay, here it is. Okay, trend reversal above here. We've got a high low. A trend is starting to develop here, these high lows, which is good. We're now seeing some demand, some buying. Jump on board this one, and momentum is positive. It's above the average. Trend intensity rating is +10. Had a good move yesterday. Not too sure what it's doing today, but it is looking very good. So that's constructive for A2 Milk. And another stock which has had a huge downtrend, which is starting to recover. It got knocked about an awful lot by China situation. And it is recovering again, so that's a good one for you at the moment. Just going to show you a couple more that I really like. Mineral Resources, just a simple new high trade. It's a wonderful, wonderful thing as long as it's managed properly. Remember, wrote the analysis, the new high that gets me in, and invariably with the new high it'll be above the average, and momentum will also be bullish. Volume can be a bit different sometimes. With Mineral Resources, the volume patterns are a little bit hard to read sometimes, but we do have a weight of evidence with our trend intensity rating, and that helps us. At the moment it's at +10, and the price is advancing nicely from our entry point a few weeks ago, and the momentum is very, very strong. To push it that high means there's plenty of gains to come yet. Okay, so that's Mineral Resources, which is looking great. New Farm, well, it just suddenly turned it around and had a big chop down. Went sideways for a while. It's now broken out recently. We've got into this as a trend reversal. We've got some volume here starting to appear, and momentum is starting to get better. Fairly simple trade, but it's been quite effective so far on New Farm. So, it's an interesting construction here. It did trade range for a while, but all of a sudden it's just gone bang, and the buyers have got on board this one. So that's a good one, New Farm. Okay, Perseus, I should say, Perseus. It is, it had this huge rally here, but it's hanging on to it despite this. The gold price, the gold price has been strong, but not extraordinarily strong. So this has been a really good stock. Trend intensity rating is 10. It's back on its highs again. It's doing very well. Go, make sure you manage these stocks with a stop. We always manage with a stop, but it's be very careful because these ones can come back. But it's still looking good, Perseus, and the momentum is good. Volume is still good, and it's looking great. So I just thought I'd show you that one for a matter of interest. It's an unusual pattern, but it's just doing it. Spark was a really interesting stock because as soon as we got into this stock, it came down. As soon as it made this beautiful new high out of this trading range, it went up for a couple of weeks and looked sensational. And then all of a sudden we had this huge block down. I can't remember what happened, but there was a huge block trade of selling here, huge volume, which drove the price down. We didn't hit our stop, we didn't take out our stop, so we did have to sit in there until see what would happen. But luckily it has recovered very well, reasonable volume, and even on these two bars here, you can see there's two big selling bars here. They did nothing to the price, and that means the buyers are absorbing that, and now they're pushing it higher again. So that's a really, really good sign for Spark. Its trend intensity rating is +8, and it looks fine to me now. We've got to, taking these bumps is a bit hard sometimes, but that's just the nature of trading. Every stock is different. When we look at things like Perseus and we look at Spark, it's just all different. But we just have to control what we do, look at our patterns, look at where our stops are. And to know why you buy, you know what to buy, know why you sell, you know what to sell type situation. But they all behave a bit differently, which makes it a little bit hard sometimes, but that's the way it is. Okay, a couple of potential ones for you here. Blue Scope is looking interesting again. It's had a big downtrend, not that early yet, but if we look at this area around here, we've got quite a bit of resistance through here, which it potentially is a trend reversal pattern. The trend intensity rating is still -6, which is reasonably weak for Blue Scope, but all of a sudden we've got some good volume pushing this price higher. Momentum is still weak, but it's certainly eased off. It is above the average, so it's quite constructive at the moment what we're seeing. We're seeing this turn. It may chop about a bit further yet, I don't really know, but it's certainly worth watching. And if you are interested in the stock, I'd certainly watch the price if it goes above about $17.80, $18. Okay, so that's Blue Scope for you. The other one, QB Insurance. Now, why this one's going up is a difficult one considering what's happening with our floods and things like that. I don't know what their exposure is there, but I do know that this has been a trading range for about 18 months, between about $11 and about $13. So quite a tight trading range. But it's been very, very constructive trading range because we have all this behind us. We have the lows behind us. It's held above this area here, the old high. It's maintained the gains. Now it's starting to rise higher. Now we had a bit of selling here the last couple of weeks. Didn't worry it too much. It's back on board again. The volume patterns aren't that constructive, but it's above the average, and the momentum is starting to push higher as it breaks through this range here. So my bet is it'll probably go to 15 fairly quickly once it breaks through. But it's an interesting stock, and you may hate it, a bit like Qantas, and if you do, you don't have to. There's plenty of other fish in the sea for you to look at. But I do think it's a very interesting stock, and if it does break through here, this is key resistance here, and there's been some heavy selling here, so it's certainly worth noting. In my books, if price goes above there, that's a signal to buy the stock with a stop. Okay, so that's QBE. A couple more for you. AGL, well, is the war over there? Now that Cannon Brooks has got his way, he's got a few directors on the board. It's chopped about a little bit. We've seen some bottoming patterns here. We've now got a higher low here. A little bit of volume, nothing significant. It's now starting to move above the average. So the average was down. Now starting to go sideways, and it will start turning up shortly, and this is also starting to turn up a little bit. So it's an interesting situation with AGL, so I think it's certainly worth watching. Now the highs up here are around about 888, 890. That's probably the area you want to watch out for it to be a significant break. But it's certainly worth watching AGL because there may be something happening there because there's a significant change in the way it's doing its business and the ownership. If we see some buyers some demand start getting on board, then this could recover because it has been pretty well sold off stock recently, like the AMPs and the A2Ms and things like that. There's good opportunities out there at the moment. The next one, which is a bit of an odd one, and we obviously saw all this happen before, that who knew what about this blockchain thing that was going to go, because this volume was just enormous and it just drove the price right down. And ASX has been in this trading range for quite a while. This has been the confining. You buy it here, you sell it here. So are we buying it here? Well, all of a sudden there's some huge buyers in this stock. So the sellers have sort of got out of this stock now. They've done their thing. The news has come out. The buyers have come in and said, well, this is a good price and we're going to buy it. So they've decided to do it. It's not above the average for us. The momentum is still weak, so it's not something that we trade, something like this, but it's certainly worth watching. And if you're interested in this stock and you want to take a punt, then it might be a good play for you here back to the top of this trading range, quite possibly. Okay, so as it says up here, the price never lied. It's going up on good volume. Okay, so that's in positive. Okay, the last one I want to look at is DMP, which we have looked at for a bit, but it's trying to carve out a bottom. Okay, and we've got the long-term support that's come back to, but this volume here is fantastic. Even the big red bar that we saw last week, it's sold off. Trend intensity rating is still -8. It's below the average. Volume is better, but the MACD is still weak and the trend is still down. So this has got to turn a lot more yet, but the signs that there are good. And again, I'm a buy on weakness, but not total weakness. I've got to wait for a trend reversal pattern to happen above those lows before I actually buy it. So I'm conservative and I wait. But it's an interesting situation to watch develop. So we'll follow this every now and then just to see what does happen, whether it recovers. It's got the cheap pizzas, and that's an interesting play. Okay, so that's most of the stocks I've got for you. There's plenty there at the moment. There's plenty on Stockradar for you to have a look at. So make sure you go and have a look at it while you can. Take a trial. And if you want to subscribe, there is that membership opportunity you can take before the 5th of December if you want. Okay, so now what I want to do is go to trading tactics. I'm going to have a look at this win-loss ratio again because this is pretty important. Okay, so we can see the Energizer 5 stock. Why? 14.7, 16.8. Well, let's just have a look at this. I think I told you about some of the stocks in there. So when we look at the August 220 stock, the August 220, which we're looking at now, the portfolio compound annual growth rate is 14.7. We've had 11 losses. We've had 11 wins and 17 losses. So our wins have only been 39%. Okay, the rest have been losses. But let's just have a look at it. So our start value was 100,000. The portfolio value is now 131,644. Okay, so if we look at the total wins, the total winning pool is 61,000. Okay, divided by 11, that gives us an average win of 5,565. Total losses is almost half that, 36,000, and we've had 17 of those. So we've limited our losses, we've cut them small, and the average loss has been 2,150, and the average loss is 1.6% of portfolio value, which is really in an acceptable band. Okay, so it just shows you how important it is. When you do win, you must win big, and you must hold on to those winners because they're important. So the 11 wins here and 17 losses. When you lose small. When you win big, and that's what you've got to do. So you can't make it win big, but when they do come along, you've got to make sure you lock them in. That's why money management is the key to me, to what I do when I'm trading, because if I use analysis, sometimes it might give me a bum steer. But I always use my stop. There's always trailing behind my wins, and even with something like computer share at the moment, it's still going up, and computer share's broken up again and keeps going. And computer share is not in this portfolio, but it's in the next portfolio. So that's the August 20 portfolio. It's been going for 2 years. It's done really well. We've had 17, 27, 28 trades in all that time. So they're low volume trades, so your costs are low. And your brokerage can be down to $9.50 these days and these sorts of things. So that's a really good thing for us. So if we do trade these processes, we can do very well indeed. Okay, so let's have a look at the next portfolio. This one started in March 21. Okay, so about 9 months later, or 8 months later. And it's also, the market is not that much higher than it was in March. Okay, so what we've got is we've got 16.8% compound annual growth rate. We've had 7 wins and 14 losses, so we've had half the amount of wins as losses. Okay, but if we look at our dollar value, our pool has been 40,000 on wins and 20,000 on losses, so that's twice as much. So of those seven trades we've had an average win of 5,747, similar to the other portfolio, but our losses have even been smaller here at 1,471 per trade, and that equates to an average loss of 1.2%. So that is a story about wins and losses. So win-loss ratio is not that important. It's what is underneath that win-loss ratio. What are your losses? What are your wins? And that's the important part of this. So what do we learn from all this? And this is a really simple thing to do. must lock in your big wins. You must know how to do that. You must have the discipline to do that, to follow your stop. And that's what I do, and that's what I show you in the trading center, where my stop is and what I'm doing all the time. So there's nothing hidden or mysterious about it. It's totally transparent and straightforward. So I lock in the big wins, and when I lose small. And you can see from the process there, the losses, 1.2%, 1.6% are really low. You do have some bigger ones, but I also have some smaller ones, okay? So when you lose, make sure you lose small, okay? Don't be afraid to take a loss, okay? It doesn't matter. Don't worry about your dent on your ego or anything. If you have a loss, you take it and you move on, because the big wins will come. We see these big trends in the stock market all the time, and we will get them, whether it's Whitehaven, all these other ones that we had, Boral, Luca, they've all come around in the last couple of years, and we usually get them in our portfolios. So don't be afraid of taking a loss. The next thing is you must be disciplined in following the process, taking the signals when you enter and taking the signals when you exit, and not wondering and trying to finesse things and things like that. When you get a signal to buy, you buy it. When you get a signal to sell, you sell it. Okay, so that's just a bit about the wins and losses for you. It's important to understand where they are. This is how it relates to my strategy, because I will try and track every trending opportunity I can, whether it's a new high or a trend reversal. Some will work out, some will won't. As you can see from the moment, and the market has been bad for the last 12 months, that win-loss ratio is probably as bad as it gets, but we're still making money. So when the market's going up, you've got a lot more stocks to pick from and a lot more stocks rallying, so it's a lot easier. But even when markets are coming down, there are still stocks going up. And stocks like Computershare, this has just been an amazing stock. Who would have thought that this would have happened? And it's now broken out again. So that's the story about wins and losses. Make sure you follow your rules. And if you're having trouble yourself, go and have a look at what I do, and you'll see clearly exactly what I'm doing with every single stock, all 163 of the stocks that I cover, and there's also 21 ETFs, and where my stops are set, and what the trend intensity rating is, where I enter them, where I exit them, all that sort of stuff for you. Okay, so that's really all I've got for you today. As I said to you before, I'll discuss this a bit more in the newsletter, my Radars Rant. Just expand a bit more on this wins and losses, and how it works, so you can have a little more of a good look at that. And I'm also going to focus on the consumer discretionary stocks, which some are starting to look like they might be on the move. So keep an eye on that. So win-loss. The key to win-loss is not the ratio; it's the size of the wins and the size of the losses. How many times you hear it? Run your wins, cut your losses. It's the same old story, but it's true. That's what you do to make money. So stay safe. Watch your trends, heed your stops, give me a call if you need me, and I'll see you all again next week for more stocks, and hopefully there will be more for you. Thanks very much.